Some of the things that I really value are just like being curious, asking questions. I love accounting, which is like such a geeky thing to say, but I don't want to be, a stuffy accountant that sits in a cube all day. So finding those, like being proactive, finding those opportunities that work for you. Every company needs an accountant.
If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode. Hey everyone, and welcome back to the show. I am Blake Oliver, CPA, joined today by Keely Favoino, controller at Foxtrot. Keely, welcome to the show.
Thank you so much for having me. It's great to be here.
We got to know each other a little bit because you are an Earmark subscriber and you generously dedicated some of your time to give feedback on the app. I really appreciate that.
Yeah, huge fan of Earmark.
Oh, thank you. Well, and we started talking about what you do for a living and your role as a controller at Foxtrot, and I thought, oh my gosh, this would be a great Earmark episode. So we're here today to talk about, I guess, the last 2.5 years of your life in many ways,
yeah.
Which is quite a lot. I mean, they always say in startups that a year in a startup can be like 5 to 10 years.
Yeah. I used to say when I hit my 2-year anniversary, I was like, it feels like 12. So,
well, let's talk about that then. What is Foxtrot?
So Foxtrot is we call ourselves the modern day corner store. So it's all rooted in convenience. We started in Chicago in really popular, dense, walkable neighborhoods in the Chicago area. And really everything was geared around that convenience, but a unique offering, somewhere that you actually want to go. So we have these beautiful storefronts and you can come in, get a cup of coffee and a breakfast taco. We have grab and go coolers of salads and sandwiches, a huge wine offering. We have a sommelier on staff. He definitely has the best job at Foxtrot.
Wow.
And then tons of, snacks, more sweets than you even know what to do with. We have a whole private label program where we make our own gummy mixes and candy mixes. So it's really a fun experience to come shop in a Foxtrot. And I think the two really unique offerings that we have are, one is just partnerships with small local vendors. So we work really closely with different vendors in our communities. So Foxtrot's now in Chicago, Dallas, DC, and recently launched in Austin. So in each of those markets, you're going to find local craft beer from a small local brewery that's based there. There's different pastries that are offered in each store or in each market based on, from a local bakery there. And then we partner with a lot of, small brands that have maybe never been able to be in a retailer before. It might be the first one or the only retailer that they shop through. So if you're a customer and you come in, it's kind of a surprise and delight experience. You never know what you're going to find in a Foxtrot. And the other thing that's really unique too is, we have our own app and we deliver in each of those markets. So we have our own, courier delivery fleet. So anything that you can find in the store, you can also get delivered to your house.
So this is like, I'm picturing, my corner store is a 7-Eleven. This is like you've taken the 7-Eleven and maxed it out in terms of what it can be from a luxury standpoint.
So the line that I always say that we're not supposed to say, but we're a bougie 7-Eleven. So and it helps paint a really nice picture for everybody. So
yeah. Wow. So like sommelier, you do delivery, you've got it sounds like deli kind of stuff going on in the stores.
Yeah.
I mean,
there's a lot going on inside.
Yeah, I mean, because you're like part restaurant, part grocery store, part convenience store, delivery service.
Part bar. We'll have, we usually have like 2 to 3 kegs in each store. So you can get draft beer, you can get wine by the glass. We've started offering pizza in some of our options. So fun, happy hour spot if you want to come grab a glass of wine with a friend after work. So we kind of, one of the expressions that we like to use is like AM to PM. Like you can find something that maybe you don't need, but you definitely want at a Foxtrot. in the morning all the way through into the evening.
Well, that sounds great to me as a customer,
Yeah.
but now I'm putting my accountant hat on and I'm thinking, that's a lot to keep track of.
It
So
is. It
was it
is.
so 2.5 years ago when you started, was it always like that from the beginning?
Yeah, so it was, Foxtrot actually started as a delivery only business, which is kind of interesting because our retail stores are now such like a part of the brand and a part of the identity. But, opened our first retail store in I want to say maybe 2015 or so. And it's always been complicated because when you think about I what I always like to say is like none of these are complicated concepts in and of themselves. Like we didn't invent leases, we didn't invent inventory, but we just have like a lot of those bigger concepts. So ton of leases, ton of fixed assets with our store build outs. Inventory is huge for us because when you think about I always say like it's really cute and fun for the brand that we work with all these small local vendors and carry like one kitschy SKU from somebody, but like that's another SKU that we have to track. So we have thousands of SKUs in each of our stores. So just a huge inventory supply chain challenges. All of our grab and go sandwiches, we have commissaries in each of our local markets where we produce those and then distribute them into the stores. So that's like a business in and of itself.
Oh, that's
And
another one we got to add to the list. I think we're up to
yes,
6 now.
yes, all of these different like micro concepts that when you're, a younger company, you don't have infrastructure. We were on QuickBooks Online at the time. A lot of things we just didn't have systems for, certainly nothing for fixed assets, nothing for leases. So a lot of Excel, and where you did have systems, they didn't necessarily talk to each other. So, no communication from inventory system to AP system. So definitely had a lot of its challenges that I walked into when I started.
Well, what was the scale of Foxtrot when you got there?
So we were at 10 stores in 2 markets. We had 8 in Chicago and 2 in Dallas. And as of right now, we're at 26. We've opened up in the DC area as well. I always say I can tell when we're starting to get kind of big when I can't remember exactly how many stores we have in each market. Or, I
Yep.
used to know like the address and how much we paid in rent at every single store. And now I'm losing my touch, which is how you know that you need a system to track some of this stuff. But we're also in the DC area and then Austin. So recently just launched in Austin as well, with plans to open, I would say like 5 to 8 stores this year.
Okay. So around 10 stores when you started and 2 markets. What did the accounting team look like when you joined?
So there were 2 of us. We had, it was myself as a controller, and then we had a staff accountant who's technically a staff accountant, but in practice was full-time payables. At this point, we were processing, I would say about 1,000 invoices a month. And it was really just her entire responsibility was trying to take all those invoices and just get them into the system. And so AP was definitely one of the first things. I had joked that I was like, I worked here for like 2 hours, and I was like, I think we have a giant AP problem on our hands that we need to address. So there was just the 2 of us, one full-time AP, and then I kind of was everything else. So
And what did you inherit? I mean, this AP person, was that the first hire in accounting, and then you came in to organize it?
there had been somebody that was kind of managing things, trying to manage things beforehand, and then AP as well. So I kind of took over that role. So there was some handoff, but definitely it was not. I would like to say, we were kind of bookkeeping at best.
Mhm.
I used to say that we were trying to like literally keep the lights on in the store was kind of the benchmark. Like
Pay
just
the
make sure
electric bill.
make sure the electric bill is getting paid is kind of like the expectations and the level of service that the department was providing. But at the time, we were really starting to accelerate our growth. COVID was actually really good for Foxtrot with their e-commerce business took off. And it's really what put Foxtrot on the map of, allowing us to start to scale the way that we have been was getting this explosion of COVID e-commerce business and really turning us into a true omni-channel business. And it attracted a new type of investor that maybe wasn't as interested in just a retail
Mhm.
store before. So we were able to raise money to help fuel that growth. But with additional funds and investors comes like people want financial information.
So that was the impetus to get a
Yep, that
controller on
we
the
need
team.
to level up and turn
Yeah.
ourselves into a real accounting department and not just, bare minimum bookkeeping services.
Okay. So you came into what you must have seen as a real challenge.
It was
I mean,
it was I did for the most part know what I was getting myself into. You never truly know until you're in the weeds, but I knew what the situation was when I was joining. And that was really part of why they brought me in and why they reached out to me, was because I had experience in kind of startup accounting, creating something out of nothing, know what things are supposed to look like, and so kind of knew that I would be the right person for the job to take us to where we needed to get to.
okay, so this wasn't your first startup
Is
gig.
not.
Okay,
I
so
don't think I would have made it if it was.
let's talk about how you got into the world of startups because I know there's a
Sure.
lot of folks listening that, maybe they're in public accounting, maybe they're working in, at a big corporation and
Yep.
they're excited to go to a startup or go to a growing business.
Yeah.
How did you get there? Tell us your journey.
So I started in public, like many, many people. I did, got my master's, got my CPA, and started at EY in audit, super traditional background.
In Chicago?
Um, I actually was not in Chicago at the time. So I went to college in St. Louis and I started in the St. Louis office. And then I transferred out to the Seattle office when I was like a staff two, which I got to work on some cool clients in Seattle. My main client was Zillow, and then I worked on Amazon as well, which was a
Yeah,
mind
that's
blowing.
a
It was
big one.
incredible. Yeah.
And
So
I mean, I imagine at the time, that was Amazon's huge growth period
it
a few
was
years ago.
it was crazy. And
I mean, they're
just
still growing
seeing.
like crazy, but back then I remember the headlines were all Amazon all the time.
Oh, right. And,
Yeah.
just seeing, something like their internal controls, it was like they had 400 controls for inventory alone. And you were just like, oh my gosh. The audit team was huge. There were international audit teams. So it was a really cool and unique experience for sure.
Yeah.
But I, like many others, public accounting just I didn't see it as my future. Something that I really was lacking was that tangibility of your work. I used to say, you grind so many hours and at the end of the day, it's the company's financial statements that you're producing. And I'm definitely somebody that needs to see the fruits of my labor, which, as we get to kind of how I get to startups, that is the ultimate tangibility of your work. So I moved, I jumped into financial reporting from out of audit, which I think is a kind of natural
Yep.
transition. And I really loved my role in FR. I was at Starbucks because I was out in Seattle at the time. And I really attribute that role to shaping how I think about accounting. I take a really reporting lens to everything that I create, and it really helped teach you how to craft a story. We basically wrote the earnings release and the MD&A. That was all rooted from our team, so it really helped kind of help connect those dots in
Mhm.
that you maybe wouldn't get that experience otherwise. But I got the opportunity. I was there for about 2 years, moved into a manager role, and had gotten connected to some folks over at this company called OfferUp. It's an app where you buy and sell things online. And at the time, I didn't really know anything about startups. Hadn't heard of that. Work. It had never occurred to me to work at one and that they would need an accountant.
What
And
did you what did you think that you were gonna end up doing when before you made the switch into startups, where did you
I
see
mean,
yourself?
I thought I was going to be a partner at EY for sure when I first started. In my start class, we ranked who we thought was going to last the longest, and I was pretty at the top of the list. So I definitely, I didn't know any better at the time. And Starbucks also was really great at internal movement within the org. The Starbucks accounting and finance org is like 300 people, and people like Cupid shuffle around jobs there all the time. So I kind of thought like I can have like a really great career at Starbucks. And I definitely think I could have. I loved working at Starbucks. I really liked all the people that I worked with there. And I could have easily like, slotted over into corporate accounting or maybe moved over into the finance team. That was kind of just where I thought I was going to go and stay. So, I knew people over at OfferUp and
And
was
you just
like,
got connected to them through being in Seattle.
so my husband was actually working there at the time. So he
Ah,
had gotten a job there, and this was, our first experience with startups. And so we were like, oh my God, they have free lunch on Fridays. You can wear like shorts in the summer. Like, what is this magical place? And, hearing stories from him about the way that they would do things and how they would operate, it was just like mind blowing of like, this is so different from Starbucks. Like we get free coffee and that's it. Like there is no free lunch. We don't do a holiday party. It was such a different cultural environment. So they had a director of finance at the time, and he was looking to bring on their first accounting, full-time accounting person. And he was like, I'd like to like just, talk to your wife, meet your wife. And he and I had coffee, and I remember I read the job description and I was like, there are 100 people at Starbucks that do all of the different things that this job is talking about. So I was super intimidated. I was like, I've never booked a journal entry before because working in financial reporting, you fly so high. So I was like, I didn't think I could do it. But I think what he saw in me was like, I'm smart. I can figure stuff out, and just like an aptitude to learn, like super interested. I love accounting. He's like, you'll be fine. I think you'll be great at this. And I talked to my brother, who was working at like a legal SaaS startup at the time. He was a lawyer that went into legal software, and it was a startup. And I remember kind of asking him for advice, and he was like, you're always going to wonder what if you don't do it. So just try. And if you don't like it, they'll hire me back at Starbucks tomorrow. So I was like, might as well go for it. We'll see. We'll see how it goes. So I took the leap, and it was a team of one. So I went from like this massive org where people are like super siloed, and you have, I would say like you have like 83 prior quarter work papers to look through if something, so you don't know what happened. Like there's all this stuff to like brand new, and we've got our first audit coming up in 6 months. We picked EY as our auditor for our first year audit. Like, here you go.
and you're the first accounting hire.
First accounting hire. So like we had never booked a prepaid expense before. We had never booked an accrual before. Certainly nothing related to equity accounting at all. We were like pretty bare bones. And it was funny, my boss, I reported to the director of finance. He and I had a great relationship. And he's like, they should have hired your role before they hired mine, because like I can only do so much with no accounting.
Right.
So he kind of made it clear that it's like we need an accountant in here to come in and clean everything up. So yeah, that was my first
Wow.
step, and I've kind of been hooked into the space ever since.
Well, obviously you liked it. You stepped up and figured things out.
Figure things out.
What do you credit? Like, do you credit your public accounting experience with helping you survive that?
Yeah. I definitely think there's an element of, public accounting is you're drinking out of a fire hose when you're in it, and you do have to figure it out.
And
Everybody's busy. There's only you can ask questions, but you can only ask so many questions, and you really have to use, you have to understand what you're doing, and figure out how to step through and project manage too, because that's
mhm.
looking at looking at the whole scope of things that we needed to do to get ready for an audit is super overwhelming. But, being able to break things down into like digestible bites and create a plan of like, this is what we need to do and keep marching forward, which is, how an audit works as well.
Yeah, a little bit of progress every day, getting towards that big goal.
Yep, exactly.
Yeah. So you obviously got through the audit,
I did.
succeeded,
Did.
and how long did that process take? Going from basically nothing to getting EY to sign off.
Honestly, probably like a year.
Yeah.
So from when I started to once they had signed off, it was probably like a year-long venture. But while you're not working on the audit full time,
Right.
and you're able to take, like I said, we had never booked a prepaid before. Well, you know, we trued things up from an opening balance sheet standpoint, but then you're able to build that schedule. So then you're doing it each month moving forward. So, like the second time you go through an audit, it's way easier than the
Yep.
first time that you did. Definitely, like drafting our first financial statements ever was a big challenge that my FR background definitely helped there. Being able to kind of piece together what footnotes you needed, what different disclosure requirements you had. So it was a great experience going through that. And I think as traumatizing it was to do a Big Four audit your first time, it helped a lot because it definitely like really set me up for success in these future roles that I've been able to have.
So you did that, got that under your belt.
Yep.
Then what?
Then I moved to Chicago, and we're from the Midwest originally, and kind of we're looking to move closer to home. So moved to Chicago, pretty quickly got plugged into the startup scene here as well. I kind of, stumbled upon a finance and accounting networking group here just based on the companies that I was applying to work at, kind of found myself inserted into the community. And that's one thing that I really love about the startup space as well is it is a super tight knit community, very small world for better or for worse. So I ended up, from kind of some different folks that I had met, got connected to a role over at a company called Farmer's Fridge. So they make salads that get sold in vending machines. You might see them in an airport near you at some point. They've seen a lot of really good expansion over the last couple of years, specifically airports, but then hospitals, office buildings. So it's a really cool concept, creating healthy food, making it more accessible to people. So took the controller role there. This was my most recent role prior to Foxtrot. Definitely a less dire situation from an accounting standpoint when I joined, which was nice, but definitely was in that phase of needing to level up the amount of reporting that we offered. We desperately needed a chart of accounts rebuild and really reframing how we were thinking about the business in general. So I was able to play a heavy role in that. Learned a lot about inventory and manufacturing and cost accounting. I don't consider myself a cost accountant, but I'm pretty good because farmers were just at the time, nothing was co-packed. They manufactured everything themselves. So we ran the facility. So I feel like that's the role where I felt like I became a real controller. I think I had more authority to make decisions, and my scope was pretty large at the time. Was able to oversee a lot of different things. Was able to rise out of the weeds a little bit and kind of provide oversight and strategic direction. So it was that role that I think really kind of set me up for success. And so, knew who was the current VP Finance over at Foxtrot, knew him kind of through the same startup networking group. I had reached a point at Farmer's Fridge where I felt like we were kind of set up for success on a really good path. We had a good team in place. So it was kind of my time to move on and do that elsewhere. And so that was how I got plugged into Foxtrot.
So this is now you've done basically two build outs, if you will,
Yeah.
of the accounting systems and processes for two
Yep.
different companies, and you decide I want to do it a third time.
I said, let's do it again.
Let's do it again, but let's take it up a notch, right? Now it's even more complicated, it sounds
Yes,
like. We're not just
more
yeah,
bigger, more complicated, like, yeah, let's do it.
let's
And
do
I
e-commerce and retail at the same time, right?
and
No
food
big deal.
manufacturing, yeah.
And food manufacturing, yeah.
Yes,
And
exactly.
and alcohol, and all
I
that.
know a lot more about liquor licensing than I ever thought I would, so
In Chicago, it's no joke to get a liquor license.
it
Same thing
is.
in LA too.
I've had to make some personal trips down to the Illinois Liquor Board to do something or other with a cashier's check. You never knew what you needed to do but when you're, startup, it is very like all hands on deck.
Yeah.
We didn't have anybody in compliance at the time. And that's one of those things that, if it doesn't have a supernatural home, it falls to accounting. So I was our compliance department for a while. And I had mentioned before, there were just two of us. We are at 10 stores, and I really, we were starting to grow. We were about to raise our Series B at the time, and there
What
was
was
just
the accounting system?
QuickBooks Online.
Got it.
So QuickBooks, and then we used Bill.com for AP. And then we had a proprietary inventory system. We've always had that inventory system that doesn't talk to any of our accounting systems.
Something that the Foxtrot team built.
Yes, that there was definitely no accountants in the room when they built that. So
That's usually how it happens. We
yeah,
get brought in after the money is raised, right? To clean up the
exactly,
mess. Yeah.
exactly. So there are definitely some things that I was like, we should probably
Did they
track that
have
or.
costing, any way to do that in the system
I would call it a fluid costing system. I don't know if that's one of the official, generally the GAAP basis. There was a cost that was able to be assigned to it, but if we went and changed that cost, if that price went up from $4 to $5, then it just restated history that
yes.
this always cost us $5.
Right.
So that one was fun. One of the other things that I learned pretty quickly was that if you went and, like, let's say the system says you have 5, you realize that you actually only have 4, so you take that one out of your system, you just restated that number. Like there was no double entry accounting that was happening. You just
Right.
magically had 4 now. And I was like, we should probably fix that. So we instituted some processes around actually, tracking movement of inventory and all that good stuff. But definitely no communication to, AP. So if we
Got it.
received, 8, but got charged for 10, there was no like systematic communication that
No
happened
purchase
there.
orders, no just
No
paying.
three-way
Got it.
match. That was I had a accounting 101 that I would walk everybody through. And that was a core concept of accounting. Keely's accounting 101 was three-way
The
match.
three-way match. Yeah.
So yes,
Well,
education time.
everybody should take accounting 101 and learn that, but maybe that's yeah.
Yeah, there were definitely, it takes, I think, but it was definitely helping put it into terms that people can understand. I think if you, go straight into like you debit this and you credit,
Oh, yeah.
people don't speak accounting. But if you can put things into terms and perspectives that they understand, people are like, oh yeah. And I'm like, you're on your way to a CPA is what I would always tell everybody after we finished. So
I bet they love that.
they did.
So, okay, we've got I just want to set the stage there with the
Yep.
system. So you had, QuickBooks, Bill.com, you're
Yep.
paying bills. You've got a totally separate, inadequate costing inventory system.
Yep.
All right, yeah. What's your first move?
So first move, because I think, when I think about accounting and like corporate accounting, I say, trying to explain to somebody that maybe doesn't understand, I'm like, you have the transactional side of things, the operational side. So, pay the bills, pay the people. If we're doing this part of our job well, then you shouldn't know that we're doing our job. You should be able to just carry on and just the expectation is that these things are getting taken care of. And then over here is, taking all that information that we have. I always used to say, like, I see every dollar that comes through this company, taking that and transforming all of that data into, information that people can use to help run the business, telling that story, providing financial insights. And that's what I feel passionate and super strongly about. I say I don't do this out of the goodness of my heart. I do it so that I can provide you insights and, help you run the business. So we weren't doing either at Foxtrot, but you can't start to tell that story until you get, your house in order on the transactional side. So I had mentioned, we had a ton of AP issues. I could tell just right when I started, the 75% of my inbox was either vendors or internal people forwarding an email from a vendor being like, why haven't you paid us? Or, we never get paid on time. So we brought in an outsourced AP partner, like basically immediately, somebody that, I had worked with at past roles that can just plug in, knows how to use bill.com, knows how to scale things. And like we built a process around AP of, this is what happens when the invoice comes in. This is how you enter it. This is where you code it. This is the expectation on response times of an email. We just like didn't respond to emails out of our AP inbox. There were over 1,000 emails and I was like, oh my God. So we got the AP side of the house in order immediately because we had, our one other staff member, she was only doing that. And so you couldn't, you just couldn't make any headway on any of the other areas that needed, because you're just constantly putting out fires. So get AP in order and then kind of start to chip away at some of the other noisy areas as well. So, talking about like utilities, that seems like easy, but it's actually pretty complicated when you have like 10, 15 stores. There's 5 to 7 utilities at each store in different regions. You have different power and gas. And, we didn't have great internal communication at the time. Accounting, because of where we had been as an organization, our role within the org, we were super reactionary. We were never brought into the conversation. So somebody would some random person would set up the power at a new store and not tell us. We didn't know the login. So we'd find out by getting like we're going to shut your power off notice. And then it was and then you got to figure out what email address the login is under. So we streamlined a lot of that stuff and really started to establish cross-functional relationships. Can't emphasize enough how critical that was in the success of us as a department. We are downstream. I'm not out selling cups of coffee to customers, but being a partner, having a seat at the table, knowing what is going on helped make our lives easier, and it helps make the organization's lives easier too. You don't want to create swirl in the store when they get a notice that their power is going to get shut off. It just makes everybody's life easier if you just keep me looped in on what's going on. So we started to have conversations. So, when we're opening a new store, we have a checklist of the different accounts that need to be set up. And, sometimes it's paid by the landlord. Okay, at least we're asking the question now, making sure, just kind of walking through all of the different things that needed to happen. And just so some of that noise that distracted you was able to get cleared away, and you were able to start to focus on the real accounting things that needed to get fixed.
You're not putting out fires. Your inbox is clear, right?
Yes.
75% of it was bills, or collections notices.
I used to say, I never knew what was going to pop into my inbox at any given time, or get a Slack message that there's an inspector at the store and we don't have our liquor license displayed. Can you email us a copy immediately? So we have a website now that has everybody's liquor licenses on it and their certificates of insurance and all of their permits. So you should know that you should have it displayed in your store, but if you need to pull any of those documents down, you can just
print it,
go into this site. So, really trying to address the root cause of what was going on versus just okay, we pay this bill and then we move on. Okay, what are the issues that are happening? What communication channels do we need to open up within the org? And how do we address that so then we can move on and fix something else? So that's when we really started to collaborate cross-functionally, which was huge.
So practically, how did you achieve that? You mentioned you had Slack. Did you just introduce yourself on Slack and say, hey, I'm Keely, I'm the controller now. We're going to get this
Definitely.
under control?
Yeah, I definitely like you have to take a lot of initiative. And I think that that's an important part of being a controller is like you need to be a leader within the org and people need to know that they can rely on you. So definitely, some of it was inbound too. I always used to say like everybody finds me eventually because they need to pay for things. So it went both ways of how people eventually found me, but definitely emphasizing that like I am a partner with you. I'm here to support you. How can I help you? I'm not, you know, just the rules enforcer, which I am. And everybody knew that, if I came knocking, it was because you messed up. I had built up that trust with people that like, I will follow through. I will pay your vendors. I will take care of things for you. So now you need to do this for me too. It was really building up that trust. And yeah, just inserting yourself into conversations. I say like I'm always listening, monitoring the general Slack channel, and people are, stores are asking random questions about something. So it's like, okay, let's ask the question, like, what is this issue that needs to be solved? And just kind of inserting my little tentacles into everything. But people learned that, you know, things are better if I know what's going
Yeah.
on. I don't come asking questions later. And then, as translating then into financial performance, if we're both on the same page beforehand, we know what's going on. We're telling the same story as financial performance shakes out versus, when the results come out at the end of the month, there's no swirl asking questions. Oh, we purchased this. Nobody told anybody. Like we're all on the same page as we move through that entire process.
So how long would you say that took, that
Like
cleaning up of the processes or the
some of the
inbox and
some of the noisy stuff, I would say it took like a solid 9 months to a year, honestly. It was tough. It was really
yeah.
tough. It doesn't happen overnight. We don't get through 1,000 emails in a day. And it was hard for sure. But again, that constant progress of, putting these milestones in place of like, okay, we need to get this queue cleared out in 2 weeks, or we need to, you know, just being like really lockstep on what everybody's working on and what those deadlines are to help address those issues. And that's where I think I had to step in and just take control and help steer and guide the team on what they needed to be doing. And that's where, being kind of the experienced member of the team, like I know what this is supposed to look like. I know how this is supposed to work, and kind of getting everybody marching in the same direction. But yeah, it took us a decent amount of time, but we were able to then start to pivot to at the
phase
same
2,
time. Phase two
right?
is like getting accounting in order.
Yeah.
So, things like fixed assets. Like I said, like we had never booked a fixed asset before. We rent expense was booked cash basis. So needed to build a deferred rent schedule. And a lot of this was driven as part of our Series B. We had to get audited. And so we had to do an opening balance sheet audit as of 2019 and then a full year audit for 2020. So I joined, right at the end of 2020. So it can be tough going back,
Oh yeah.
a store that opened in 2016, trying to figure out fixed assets for that store or something. So did a lot of work there as well. We did bring in some third party help to help us kind of navigate some of that stuff just because we couldn't maintain putting out all of the fires and like trying to build a fixed asset schedule at the same time, but got like solid, you know, annual work papers that we could leverage that we worked with them. So then the next step was really like operationalizing those each month. So something like deferred rent, like we needed to start booking straight line rent expense on a monthly basis for internal reporting. So how do we take, that file that we used on an annual basis and continue to roll it forward and build out those schedules? So this is when we brought in like the next hire of our team, because at this point it was still just the two of us, with some external help. So we brought in an accounting manager who was more of a seasoned accounting manager, kind of had to make the decision of, do I kind of maybe take a chance on somebody that hasn't ever done this before? And things were just, we had such a need for speed that we needed somebody that had that experience of being an accounting manager and knew how this stuff was supposed to look. So we brought him in, and he was really critical in taking those schedules, operationalizing them, creating formulas in our work papers that fed up to a journal entry template that then was in an uploadable format that then we could upload into QuickBooks. Our payroll export was like 2,000 lines long, and kind of creating those, mapping GLs in the system to creating those intersection points. So then when we imported it, it kind of visually showed how we needed it to show coming through the P&L. So he was really instrumental in helping us get to that point.
What level of detail did you have in QuickBooks at this point? Were you tracking by location? Did you have classes?
Yep. So we had locations for each of our stores, and then we kind of had a department concept for classes. We weren't super diligent about actually coding things into department. From a G&A standpoint, it was super we just weren't there yet. I used to refer to it as Keely's hierarchy of needs when it came to focuses of, those phases like we were saying. So phase one is pay people on time. But then when we think about the reporting that was critical to the business, it was store level was the focus for everything. So it was really, really digging in on the store level. The next phase was related to our commissaries. We definitely, we didn't have systems there. They were kind of just living in their own world. So we needed to really iron out some of the noise that happened in the commissaries. And then the third level was getting into corporate G&A department level. So I'm happy to say now, all of my reporting needs have been met from a foundational standpoint. We're able to, generate reporting packages on all of those areas. At the time, when I started, we couldn't generate anything at the store level that was remotely timely, and accuracy was hit or miss. And so it was kind of in this phase as we were starting to really operationalize stuff. We were really focused on looking at things at the store level. So making sure that everything that gets booked to a store GL has a location attached to it. So something like payroll, knowing payroll by location, super important because it's one of our biggest levers that we have to pull if we're trying to, find, increase or, what we're looking at from a profitability standpoint. So,
well, and that's where you needed that big work paper to allocate all that payroll.
Exactly. Exactly.
So you got the accounting manager in, you're getting those work papers operationalized. Let's keep going. I mean, it sounds good. You're getting that location tracking.
We're getting our sea legs underneath us for sure. At this point, we've been able, I think we had added maybe one additional headcount to the team, another staff accountant. We had gotten into a pretty good close rhythm. We've been using Flowcast this whole time, but it's a little funny, when you have two people and one of you prepares everything. It's not particularly useful. I remember our auditors asking us, do you have any evidence or review of this? And I was like, no, it was just me. So we're actually starting to, follow checklist steps and sign off on things and reconcile balance sheet accounts, which was great. Huge steps in the right direction. From an internal reporting standpoint, there had been a big internal push. We need financial information timely. So we were able to get to we produced what we called our flash reporting. It was all store level, but a store flash at Workday 5, which was huge. I mean, I remember when they first asked me if we could do that, I was like, no. But obviously, it's not the real answer. I was like, yes, we'll make it happen. And so you could just feel each month things getting easy. You just kind of continue to you get faster, you get better as you continue to get those reps underneath you. And that's where, the messaging that I would always tell to the team is like, every month there needs to be like something that's better or something that's different. Because you can't do this all at once, but as long as we're just continuing to progress forward, that's how we're going to get to where we need to go to. So we had definitely hit a groove, I would say, by end of 2021 into early 2022. We were in a good rhythm of getting that flash reporting out. We had kind of started to dip our toes into that next layer of figuring out commissary stuff. We started coding some G&A by department. So we were in a decent place at that point, but kind of, we knew that we could only survive on QuickBooks for so long.
So you had finally gotten everything to this plateau, and
Yep.
then you decide, okay, now we're going to do ERP.
Now we're
which
going to do
is-
an ERP system. Yeah.
Had you done one before, or was
I
this
hadn't.
the first?
So it was my
Okay.
first time. I feel like it was an accountant badge that I
Yeah.
needed to earn. So it was my time.
So the classic question I have to ask you is, how did you pick? Because there's a few players, but like it's a lot to decide between.
Yeah, I think, the biggest issue for us was reporting. And that was ultimately where QuickBooks just wasn't going to be able to scale with us. We were using locations, but you can only dimensionalize information in QuickBooks so much. We really needed to be looking at things compared to plan. And then the biggest issue for us was in 2022, we migrated to a 445 retail calendar. So a fiscal
Yes.
calendar from a calendar. It was how the entire rest of the business was looking at things. And, it was kind of an example of where we're constantly trying to make sure that the accounting information is the source of truth. This is, the real stuff. And then we're looking at, different time periods. So people just, weren't taking it as seriously. So we needed to move to a 445 calendar, and QuickBooks can't accommodate that.
And explain for us what a 445 calendar is.
So it is, the terming 445 comes from you don't use really months anymore. They like loosely align with months, but we called them periods. And your first period will have 4 weeks in it. Your second period will have 4 weeks in it. And then your third period will have 5 weeks in it. And you repeat that each quarter. And your weeks start on Monday and they end on Sunday. It's really common in retail businesses when you think about, Foxtrot does a lot more business on a Saturday than it does on a Monday. So when you're thinking about comparability or scheduling, you don't want to be having to do the mental gymnastics of like, this period had lower revenue because it had more Mondays in it.
Got it.
Super common in retail environments. We used a similar calendar when I was at Starbucks because it has that same number of days in each quarter that you operate in. So it makes sense. It makes things challenging from an accounting standpoint, for sure, of kind of having to always play like, well, this period ends on 128. So we need to make sure that we're accruing for anything that the invoice hits on the first, but it goes back. And then, 5-week periods, usually you get the first of the month on both sides. So you need to make sure that you're not doubling up your expenses. It's tricky, but from an organizational standpoint, it made sense to us. And so I was willing to accommodate the request.
And QuickBooks, just simply can't do that, right?
It doesn't. I emailed, I called, I talked to anybody. I probably asked 5 different people to see if I could get somebody to tell me that it could work. And it doesn't. You can toggle your dates at the top, so you can pull for those dates, but there's no concept of like prior period, or if you're pulling a P&L by month, it's just going to restate those prior months to calendar. So I had a ton of custom reports saved. I had probably within each period, I had like my suite of like 5 or 6 custom reports that had things, these certain GLs with these stores for this date range. And we lost our integration with Flowcast because of that too. So we were still able to use Flowcast from like a closed checklist standpoint, and we were able to upload trial balances into Flowcast, but that
Yeah.
integration of, just say refresh the balance, because QuickBooks doesn't know what our period end date is. It's going to pull calendar. Flowcast is too.
Mm.
So that was definitely, I didn't realize how much I relied on, that integration for notifying us about like a reconciliation discrepancy until you don't have it. So that was big from an accounting standpoint as well, that we were like, we need to work with a system that can accommodate this.
Was Flowcast something that you put in, or was that already there? And what was the benefit as opposed to using just a spreadsheet to track your close tasks?
So my boss or VP of finance, he had used Flowcast at a previous job that he was at and loved it. So he was like the big proponent of implementing that, getting that in the system. I had never used it before I joined Foxtrot, and was a big advocate for, I like called up my team at Farmer's Fridge and I was like, you guys got to check this out. Like, it's awesome. I honestly think, like, I've used, spreadsheets everywhere else I've been before. It can be clumsy. It can, so-and-so's in the file and my changes didn't say, or I guess you can use Google Sheets now and everything. But
Oh, no,
I
that's like a bad word still. Yeah. Don't say Google Sheets.
Yeah, no, Excel version issues. So, it's definitely helpful from a checklist standpoint. Like, I personally love the reconciliation element of it as well, having both of those coupled together, that real-time integration into your system. That was really huge for me. So I was a big fan, making sure all your files are saved in the same place. I really liked it. And they've built out now different workflows of, you can do compliance and finance, and they've really done a lot to kind of continue to build out that offering over there. So I was a huge fan.
So you lost the integration because you're now on a different period reporting system. So
Yep.
would you say that's the number one reason why you had to switch off of QuickBooks?
I would say it was the 445 calendar, and then that was huge. And then just the amount of time that it took us to generate a reporting package, the workbook that we used for that, that flash report that went out on day 5 was like 160 tabs. So just like endless certainly no formula errors in an 160 tab workbook. Anytime we opened a new store, which at this point, in 2022, I think we opened like 10 or 12 new stores. It takes like an entire day of somebody's time to incorporate that store in. Just the ways that we're starting to look at the business, we're starting to cohort certain stores together of like, okay, these are our core stores. These are the 2022 and like, so we had these like summary tabs, and it was just like great. And then we like added a line to the P&L, and it was like, oh my God, now I have to add this line on like 100 tabs.
Yeah, that doesn't sound fun.
No.
Your accounting manager was probably really looking forward to every new store opening at that point.
Yeah, well, it was just like, oh no. And then when we opened like a new market, it's like, oh, for the love, like this is going to add on an additional like 50 tabs because now we need to look
Yeah.
at this entire market. So it was, and at this point, we had raised our Series C, which was $100 million. Still can't believe somebody gave us $100 million, but we have more sophisticated investors now, and we need to be running the business through a financial lens. Foxtrot had always been so like brand driven, and like, this is cool, so let's do it. And now we're starting to ask questions like, but does this make financial sense to do this? So we just needed more access to performance of stores. We needed more real-time information. We needed to be able to pull those levers of like, okay, labor's running a little hot in this store. We need to pull it back. We just needed more real-time insights into things. And so we had realized before it got too bad and too painful, that it was like, we need to start going down the path of kind of leveling up our systems. So to get back to your original question of how did we decide, it pretty quickly got narrowed down to NetSuite and Intact for us. I think just based on our size, those are the two main players in the space that we work in. Both, we definitely needed a cloud offering, and we ultimately decided on NetSuite. I think from a standpoint of, we knew they'd be able to grow with us really well. They
Proven track record.
proven track record. They play a lot in both retail and e-commerce. They're really common in those industries. They have deep benches of people that have worked with in both of those industries, and they played really well with all of our existing kind of suite of tools. So partner well with Flowcast, Bill.com. We had implemented Ramp as our corporate card and expense management platform. So they partner well with NetSuite. And then we were in the process of implementing Coupa as our procurement solution, and Coupa and NetSuite play super well together. So it just seemed like a really natural fit for us to go with NetSuite.
Isn't that interesting that, I mean, the features of the ERP system are important, and it's got to be able to do the reporting you want and, handle all that compliance. But almost just as important is whether or not it integrates with your current set of solutions on the operational side, because having to replace all those would be a huge hassle, or having to somehow move it all into the ERP would be a huge hassle. That's why I never hear of growth companies, startups that switch from like a QuickBooks or a Xero into an ERP ever going to anything other than NetSuite or Intact.
Yeah.
Really. I mean,
And
it's very rare.
It's, I don't know if it's like chicken or the egg for us but we didn't want to be the first ones to try. And definitely crowdsource different opinions in this, networking group that I'm a part of. And there's always the conversation, I would say probably we have a Slack community, and probably every 6 months the question pops up of like, when did you realize it was time? And then how'd you pick
choose?
between Intact or NetSuite? But those were, with everybody in that community, those were the ones that kind of continued to rise to the top. But it is the considerations are then, what other tools are you using, and how do those play with each other? Because, we had somewhat recently implemented Ramp, had a super successful implementation of that. People loved the platform. I can't rip it out and change to something else. So we needed to make sure that Ramp integrated with what we were using.
Yeah. With these big decisions like this, with the ERP, with the expense management, you really don't get a second chance.
No.
So it makes me think of like IBM's old slogan, which was, or maybe it was like an unofficial slogan, which was, like nobody ever got fired for choosing IBM.
Yeah.
Right.
Yeah. I get that.
Yeah. It makes sense. I mean, you got enough to worry about already, right?
Right. I need something that I know that's going to work for us. I know it's been successful. I know that I have tons of resources that I can go to if I have a question about something. There's tons of people that I can turn to. I know a ton of people that have implemented NetSuite. So it was worth, just going with that somewhat safe option for us to kind of help us take that next step.
Any thing you really love about NetSuite now that you've been using it for a while?
So, I mean, again, going back to my reporting roots, we were able, all of those custom reports that I had in QuickBooks, we were able to build one custom report in NetSuite that, mapped from the GL level, from the channel level, from the location level, kind of had that whole, paint by numbers schematic, and able to create the headers of what our actual face of the financials that we show to internal, external, have that with our retail P&L stacked on top of our online P&L, by store with plan next to it, and then down at the bottom you just toggle, like it already says P3 2023. It has our period names. You don't even need to put the dates in. And that whole, maybe not the entire workbook, because it wasn't, that entire 160 tab workbook, it maybe didn't cover everything that was included in there, because there was some aggregation by market and whatnot. But being able to like push print from one report in NetSuite for something that was probably 100 tabs and like days of work, days
Mm.
of teams work was like so rewarding the first time that we like really got it to work. It was really like P1 2023. We had like plan loaded in for the first time. We had this report built and I like wanted to cry tears of joy. I was like, this is so cool. This is like everything we've been working towards is so that we can do this.
So this was recent because we are
Yeah.
recording in April of 2023, and you're saying you rolled this out for the first period of
So we
2023.
we
This
implemented
report.
NetSuite. We went live on October 31st, 2022. So
Yeah.
we spent, most of 2022 going through our implementation. We did our first close in NetSuite was in P11, basically November of 2022. It was a little traumatizing. We had like 800 sync errors when we connected Bill.com for the first time. So that was really cool.
Anyone who has used Bill.com or really any of these AP providers will. I'm very well familiar with that feeling.
Yeah. Like we did it for the first time and I was like, oh no. And even our implementation person from Bill.com that was on the phone, she was like, okay, that's a lot of sync error. Like that's a lot of errors.
And this is because you're matching up what's in Bill.com with what's in NetSuite, and
Yeah, we
yeah, there's
definitely
something.
had like some vendor naming
Yeah.
issues with, something as silly as it had the company name had like Inc. period in NetSuite and it was Inc. in Bill.com or something. So they were very thematic and we were able to batch them and kind of triage them and move forward. But yeah, it's my biggest fear going through that first close was I was like, I don't want to be missing something. I can't like swoop in week 2 and be like, actually, here's another, $500,000 of expense that we forgot to record in the P&L because we had some sync errors in Bill.com. Like that is not an acceptable answer. And so I was, super diligent about making sure that all of those things were working and flowing correctly. But we had to remap all of our existing journal entry uploads to the new chart of accounts because we changed our numbering system. We changed our chart of accounts. We added
Well,
different
that's
dimensions
always
in.
see, now that's something that I stopped doing
Okay.
when I was doing like accounting system changes, because I did a lot of those, not ERPs, but I'm talking like somebody switching from FreshBooks to QuickBooks or
Yeah.
Xero to QuickBooks or whatever, and they'd always want to change their chart of accounts at the same time.
Yeah.
And I learned it was better to say, let's just switch you over with your existing one, and then we
And
will
change it.
change it.
Yeah, I can't say that I would recommend doing it at the same time. I didn't love our chart of accounts, the one that I had inherited. It was definitely a bit of a Frankenstein job of like things were geographically all over the place. We had weird numbers. And so I was like, yeah, let's just do it all in one swoop, like clean slate, Foxtrot V2 starts on October 31st when we soup up NetSuite, but it was uploading historical trial balances was a
That's what gets you,
nightmare.
right?
A
If you
nightmare.
change this chart of accounts, now your historical TBs don't tie,
It was,
or you
I
got to
mean,
map them. Yeah.
those workbooks were real like Excel
Yeah.
formulas pointing in 17 different directions because we had some weird stuff too with like maybe it wasn't mapped to a location but it needed it was very tricky.
There's no easy solution to
No.
this, right? Like it's a tough call as to what you do. I always thinking back now, I wonder like, is it best just to change over, then modify, or is it best to modify in the old system, get all your historicals
Right,
lined
get
up,
those
and
configured how you want them to, and then you can just like
yeah.
drop and upload. Because then
But
it's
then the
hard
problem is
to.
you almost never have the time to do that
No, of
anyway.
course not.
So
Of
yeah,
course not. But yeah,
it's
now
just
we have this like fun disconnect of like, okay, like going through an audit is now going to be super fun for 2022. Of it's like, okay, here's this, journal entry. Like, when did it get booked? What system is it in? What chart of accounts does this relate to?
yeah.
You kind of have to go through like a decision tree of how you even find what you're working on.
Well,
So
worry about that in the future. Let the
Exactly.
auditors, let those young staff auditors sort that out.
They can figure it out
Yeah.
for sure.
You did it. They can do it.
Exactly. But yeah, the long-term benefits, like I said, of just, the satisfaction of being able to get that all into one place and being able to see just in this short period of time, these first couple of months of 2023, of the impact that it's been able to drive within the organization of just like how clean the information is, how easy it is to compare each store by plan, take action where needed. It's made it all worth it for sure. All the hard.
It's amazing how so much effort, I mean, we're talking years of effort, ends up being realized in a one
One page.
page
One
report.
page, yeah.
One page.
But it is, because back, right when I started, we weren't even leveraging QuickBooks fully at the time. So things like we actually had, a different type of reporting workbook that like payroll by store wasn't even getting journaled back into the system. It was all just offline. So super ripe for error, all of these different sources. And it's like it all culminates in this one pager. Like
Yeah.
that's it. 2.5 years worth of work for one page.
But as Mark Twain wrote, if I'd had more time, I would have written a shorter letter. Getting it down to one page is really hard.
Right. But
And
that's, when you think about what's our leadership team looking at? What does the CEO have time to look at? Like
yeah,
they don't have time for my like 7 bullet points about, well, it has this adjustment that you need to do over here. It's like, where are we at from a margin standpoint,
mhm.
it's like those super like high level banners that you need.
So what's next for you, Keely? I mean, you've made a lot of progress at Foxtrot. You've gotten through this ERP implementation. You've got your
Yeah.
NetSuite badge.
I've got my NetSuite badge. Yep.
That's the hardest merit badge to get is the NetSuite badge. What are you up to now? Are you gonna coast a little bit, or is it on to the next adventure?
So I think it is on to the next adventure for me. As you can kind of tell from my background, I seem to have, I don't know if it's a knack or I like to torture myself, but really I think where I found where my skill set is most useful is building. It's, stepping in and taking pulse on the situation and then moving forward of how you can help level up an accounting department within an organization. I'm super proud of everything that I've been able to accomplish at Foxtrot. And I have hired a great team around me, and I've set them up for success. I would joke that like I don't do anything anymore. They do everything. I just opine on things, really, really taught them how to do stuff. And so now it's time for me to go and move on and fix somewhere else. So I'm taking a little bit of a sabbatical right now,
Well deserved.
hanging out with my dog and getting ready for summer in Chicago. So, taking a little bit of a beat and just kind of figuring out what the right fit is for me next. So yeah, I'm excited for what's next, and but it was definitely a good point in my journey to kind of push that pause button. After getting us to where we needed to be at Foxtrot.
Thinking back on your career thus far, is there any advice that you would give to yourself? Thinking back to Keely at EY, was still thinking, I want to be a partner in the Big Four, but maybe not feeling that anymore. Like, what advice would you give to a young accountant in public who really likes what they're hearing about this life in
Yeah.
startups? What would you tell them?
I would definitely say, I guess I don't know if it's maybe advice to myself, but like things that I like that I did to help get me here, kind of twist that question a little bit. But I think some of the things that I really value are just like being curious, asking questions. I love accounting, which is like such a geeky thing to say, but I don't want to be, a stuffy accountant that sits in a cube all day. So finding those, like being proactive, finding those opportunities that work for you. Every company needs an accountant. I'm like totally not cool enough to work at Foxtrot. Foxtrot's like way too cool, but they needed an accountant. So, always being curious, figuring out what you like and how you can make your skills relevant to that. And then I think just building a strong network. It sounds kind of, cliche, and it doesn't need to be like going to these stuffy networking events, but building relationships is so, so critical. I have gotten I haven't actually interviewed for a job in years at this point because I've done a good job of maintaining connections with people that I've worked with. That's truly one of the best benefits of being in public is the connections you make. And, ending up, I had lunch with somebody that I used to work with that now has an audit client that's down the street from my office. It's a small world, and, maintaining those relationships I think is super important, because when an opportunity comes up, you want them to think of you.
Don't neglect the relationships. Yeah, that the CPA who bought my bookkeeping firm told me the number one thing in life, the most important thing is relationships.
Yeah.
I mean, it helps to be smart, but it's more important to have good relationships.
Yeah. I mean, I joke, Chicago's third largest city in America, and the startup world is really small in finance and accounting. And so it's great if you're good, maybe it's not like if you don't have a good reputation, that will also follow you. But, the relationships that you're able to build, the connections you're able to make is super important. And like I was saying, it helps you with career development. It helps you with, like I said, like, super tactical stuff of like, we were struggling with like the NetSuite bank feed, and I just like sent out a message, and I got multiple people responded and was able to connect with some folks to help us troubleshoot stuff. It's super critical to maintain those relationships within the community that you work in. And, I certainly wouldn't be where I'm at today if people hadn't taken a chance on me, believed that I could do it. And so I try to kind of continue to pay that back into, young talent in the future, hiring smart people into my team that I know I can hopefully learn stuff from me to then kind of continue to build that forward.
So I think that's a wrap for this. Keely, it's been so great speaking with you. I'm sure our listeners have gotten a lot out of this. I know I have. If anyone wants to follow you online, connect with you, where's the best place for them to do that?
I would say LinkedIn is probably the best place to reach out to me. I do have a Twitter account, but it's mostly sports and cute videos of dogs. So I would say LinkedIn is definitely the best place to get a hold of me. And, I love, geeking out about accounting, sharing information about startups, and, speaking with others. So please don't hesitate to reach out.
Look up Keeley Favoino, CPA, controller at Foxtrot, as we record this. Soon, maybe something else.
Yeah.
So, find her on LinkedIn, and you can always follow me. I'm on Twitter at Blake T. Oliver, and do subscribe to Earmark. You can get the app for free on the App Store or on Google Play and earn CPE for listening to this episode. Keely, it's been great talking with you.
Thanks so much for having me.